So welcome everybody. Thank you for joining us virtually. So given the current situation, we decided to sort of move our event to the digital streaming form. We're very happy that so many of you are actually joining us virtually via the streaming channel that we set up for you. Thank you as well to Agora, who's actually making this possible.
Thanks a lot for that. Yeah, very short time. Thanks.
So in the first part of today's stream, you will have Gonzalo, who is our founding partner from Spain, sitting here with me talking a little bit about what Faraday actually does, what our plan is, not only for Germany but for Faraday as a whole. Yeah. Gonzalo will tell you a little bit about our history as well, and then in the second part of the conversation, we will have a couple of the CEOs from Spain actually also joining into the live stream, who will have a little panel discussion with us on one side on how actually they are coping with the current situation, but also about some of the challenges that they had when setting up their companies.
Yes, it is very interesting because it's three companies that actually have done very, very well and huge growth in revenues and huge funding and everything. But they're three related to the travel industry in a sense, so in different ways. So I think it's very interesting in this crisis at the moment how these innovative entrepreneurs are coping with this situation.
Exactly, both on the negative and on the positive side with everything that's happening to them. Exactly. Also, what we'll be doing before we get started is that you actually have the possibility to ask us questions via chat. We will actually leave that open for the end after we did our quick presentation, or a quick chat, better said, where you can then send them to us and we will have a little Q&A where we'll actually talk about whatever concerns or interests you might have. So for the ones of you who don't know us yet, we thought that we'd start off with telling you a little bit about what we actually do and how we do it. So our idea is to provide our partners with the best investment opportunities in high potential and innovative companies. But not only that, we also try to support our partners and investors throughout the whole investment cycle. That means that we actually start by doing the whole due diligence. We start looking for starting off actually with the deal sourcing. So we look for the startups that could be of interest. We have very, very personal interactions with these startups and analyze them to the very, very last sort of Excel cell that you could imagine, to see if they actually suit and fit our investment criteria.
Sometimes, because we've been analyzing together very interesting German companies in the last couple of days here from Munich, and actually we're near our first investment in Germany, and some companies tell that we are heavy in our analysis. These companies, when we go to the end, they say, thank you for being so heavy with these covered metrics that were so important to our business that we were not really looking at them. And now we understand a bit better our business. Obviously, they're the owners of their business and they know much more about their industry and everything, but sometimes very quantitative, analytical approach to analysis. It's very useful from an outside point of view.
Absolutely.
For them.
And we'll tell you a little bit about, because there might be some founders and entrepreneurs out there watching as well tonight.
Sure.
We will also talk about a couple of ideas that we have that can actually take you to a next level also in your quantitative analysis. So like I said, what we basically do is we look for the startups, we analyze those startups, and once we've actually finalized the investment process, this is when a lot of the, let's call it, real work starts, because this is when we actually work together with the startups to help them grow commercially, where we help them to fulfill their goals and take their business to the next level.
When the deal is closed, the relationship begins, and that's the real work Dennis is talking about. It's really following the company, trying to help them grow healthily and quickly, commercially. So I'm defending the interest of our partners. But that's where it all starts.
Yeah. And just maybe to close the circle, obviously, at some point, both the founders, but also the investors and us, sort of go on this journey together, because everybody wants to gain, everybody wants to win, everybody wants to take this to the next level. And this is where we also support both our investors, the partners, but also the startups when we go to processes of future financing rounds, or when it actually comes to selling their company or getting acquired by a bigger player, where we can actually help them to make sure not to undersell their company. Yes, because a lot of the founders that we work with are also first-time founders, and they might not even have an idea or a clue of how to value what they have in hand.
It depends a lot on what the potential acquirer has in mind. For some potential acquirers, it might be a lot more valuable than for others. And we come, some of us come from the M&A world. We know how a competitive process works, and it adds a lot of value to a transaction and to the shareholders of startups.
Absolutely. So a lot of you might also ask, what do we actually invest in? What is the investment criteria that we look at? And that is actually summarized in a few very, very simple points. And again, Gonzalo can jump in here while we're talking about it. So what we look for are, as I said already, very innovative startups with a high potential for growth, that are obviously currently seeking for financing. Yeah, because if they're not looking for money, then we can actually help them. Yeah. So what we tend to look at is companies that are looking for an investment of somewhere between 250 and 250,000 and 2 million. But where we also are quite frank is that we usually enter somewhere between 250 and 500,000. So that's usually the first round that we would do.
We've done more, but we believe it is very healthy for us and also for the company to be co-investing as well, to not be the only professional investors in the company, because the evolution of the investors, the company, so can make it really healthy to have various points of support.
Absolutely. Yeah. Next to that, and this is probably again something that shows our analytical side to the whole story, is that we look at companies that have at least 6 months of revenue. Why do we do that? A lot of people ask, why revenue? It seems so simple. The thing is that revenue tells you so much about a company. Revenue tells you about, do they actually have a product or a service that they can sell to a customer? Do they know where to acquire that customer? Do they know how long that customer will actually stay with the company or has stayed with the company? Is there a repurchase? All these kind of things are all information or infos that we can get out of something which is revenue.
It's exactly what you say. It's not just it's the revenue, and the revenue gets you so many metrics about the health of the business. We were talking about the margins, for example, kind of the differentiation of your product. Sometimes and many times it's translated in the value added in the margins, in the gross margins of the revenue derived. Say, there's the recurrency. When a customer is happy, he comes back again. And this is very obvious with these SaaS models with monthly subscriptions. But very true from the metrics point of view, but also from a, I would say, quality point of view, quality analysis. We can call clients. We can call clients that are paying, and we can ask them, are you happy with the product? What would you like the product to have more? And this is very useful for the founders, because when we come in with an idea of the upselling potential of the solution, platform, product. Depends.
Yeah, absolutely. Thank you again for the for the little ping pong that we're playing.
We love numbers.
Yeah,
but it's not everything. Nothing is everything.
Yeah, I mean that is obviously also one of the things that we say here, that we look for the excellence in the team. It's not only about numbers. Obviously, that has a very important part to it. But again, also those numbers reflect how much customers actually like and love a product. Because if they rebuy, they have a certain trust and they actually appreciate the service. And picking up the margin question, the more somebody loves a product, the higher the margin probably is, because they're willing to pay more for that product. So this is obviously something as well where we strive for team excellence, or for excellence in general, with those companies.
Yeah. I would, since you touch on the team excellence, I will also add about the alignment. is not only the normal alignment of interests between all the shareholders of the company that you wish to have, it's also really the motivation. So do they believe in what they're doing? Do they think they're adding a value into society as a whole, obviously, but they're doing something that not everyone can do the same way they do it. They are working on a niche segment of clients that are really happy about what they're offering to them. So I think shit happens and problems will come, as we all see now. Okay, but people that really believe in what they're doing have much more strength in these difficult situations to, go against competitors and find the solution and strive for success.
Absolutely. So that is sort of, I would say, the side that is very, very strong on the startup side, on the company side. But also, if we now have a look at what is important to us and for our investors when we sort of look at the output side, so to say, not only the input from the startup, but something that is very important for us also is that we're looking at certain revenues or growth that we can actually then turn into profits and into returns for our investors. So this is also something where we look for companies that could potentially grow very rapidly. Obviously, everybody says that, but this is something that we really try to focus on as well.
And obviously, we're very happy with a sale and everything, but we look for companies in particular that aim to be sustainable, not in the social impact term, I mean in the more revenues than costs term, which is sustainability for a company, which is in legal correctness and stuff, but they want to be profitable intrinsically. It's not just about selling to Google in 4 years, it's really adding a value to their customers and to be able to have a lot of customers, very happy customers on top of their minds, and to be profitable company. Absolutely. So what we said a couple of years ago is that we need to invest in a company that, even if it's not sold, it will still be a very profitable investment for us.
Which is something that doesn't happen with a lot of funds, actually, if you think about it. That's a very nice segue to sort of say, okay, what actually makes us special to a certain extent? Yeah, why are we not any investment club? Why are we not any VC? Why are we different to what else is around there? And I would actually give that to you for a minute.
Sure.
Since you also started, or you sort of created the idea in your mind a few years back, if you can give us a couple of...
Yeah, we're going to talk about a bit this differentiation, but why it all began, because we were already in a crisis, not the last financial crisis, which is less than a sanitary crisis, obviously, but we saw that entrepreneurs, particularly in Spain, did not have access to finance, capital markets, and other sources of investment assets were really, very difficult to assess and to trust in the medium term. People wanted to invest in non-quoted companies, in innovation. We all knew that, the entrepreneurs had a big part to play. But obviously, when you are a small investor, can invest only small tickets and want to invest in innovation in early stage company, which have a lot of profitability potential, but you don't have the experience, you don't have the capability, the investment capability, you don't have the contacts, it's very difficult to detect deal flow. And it's very difficult to have relationships with 10, 12, 15 different companies with small ticket sizes, where you have your own job or your own company or whatever. So we thought about creating this kind of platform where it will give the private investors, small investors that wanted to make or minimum ticket size is 2,000, but the average is kind of 10,000, so that with small size ticket you can have a diversified portfolio which is managed by a single manager that you trust and that you know there are nice that can call at any time to see, I don't know how this company is doing, I'm a bit afraid of their prospectus in the near term. We're here anytime for the investment you've made for us. And at the same time, try to get the force of all these investors that have invested in the company, in particular in commercial contact terms, okay, to try to help the companies that they invest. So we are kind of a hub where we try to bring the strength of the very well-related and connected network of private individual investors to help these companies and for these investors to be able to select for them as experts in financial analysis and stuff, the companies that we think have the best practice for growth according to the innovation, the teams, everything we've said. Mm-hmm. So what's the difference?
Sorry. So one quick question to that, which is also interesting for the startup side, so to say, is something that you just mentioned, is the actual interaction, the helping out the startups with commercial contacts.
Yeah.
Maybe you can give one quick example of a situation where this has happened.
Yeah. So basically, what this happens from our beginning. So we have this as a vocation. We say vocation in English. Yeah. So we know that it is difficult to open big doors for early companies, and a trustworthy source. Someone that knows the person that you want to connect or that has worked in the company that you want to connect with is very, very useful when you have less than 2 years old, less than 10, 20 clients, customers for your software or technological solution. And so in every single quarterly reporting of our startups, our investors, the 47 investors that have invested in that particular startup receive as a first page, your invested company needs these 3 contacts. If you have them, please put yourself in contact with us and we will make the hub. Yeah. So thanks to that, in Spain now we are 208 partners. So it's quite easy for us to be able to contact the company that our portfolio company is targeting. And we had successes in Iberdrola, the biggest company. Obviously, this works better for B2B enterprise sales than for B2C. But it also works for strategic alliances for the B2C part with other companies, big companies, obviously. So we know, because our focus is business creation, okay? And we want to support business creators, entrepreneurs. We know that the best proxy of our profitability, of our exit multiples, is the growth in sales. Profitable sales at a unitary level and then at a global company level. So we try to help them in that particular way very strongly. And now, as you know, we are designing and we're going to begin in a couple of months with a particular program where we will incentive for not only the partners that have invested in that particular company, but all the partners of Faraday, that's 220 as of today, across Europe, which I believe is going to be very useful for the internationalization of our portfolio companies, to bring them the opportunity to participate at an advantage with an incentive in the growth, the commercial growth of our portfolio companies.
Whoever wants to know more about the actual scheme behind that, we're more than happy to sort of do that in a personal chat.
Sure.
So afterwards or any other day.
About the differentiation you were talking for investors, because that's a very useful thing that we were not going to mention. That's for startups. It's very important. Our magic ingredients for partners is that first, they can invest, they can construct their own portfolio. So they can put 10,000 in at one, but this one is kind of a bit more risky. I'm going to start with 3,000 to 5,000 and see how it goes. So they build their own portfolio, but from a qualified and protected deal flow. So we receive 100 companies a month. Okay, so we make like 6-7 new investments a year in Spain. Now it's going to become more because we're opening new countries, new clubs. But we are very, very selective, heavy in our analysis. So we are very selective and we try to be very accurate. So when people or partners decide to invest, they know that we have really gone into the numbers and into the team and everything. So they receive a very qualified deal flow. And they know that once they invest, they're going to be protected until the last partner sells the last of his shares in that company. Okay? And for us, it's very important. Obviously, we have had some exits and some very nice situations and very nice returns for our partners. but really these companies take very little time as compared with the companies that we try to save when they're going bad. Okay, so but it's important, very important for us to make our partners see that when things go bad is when we are really there, so they can trust that. Another very big differentiation is that the partners become partners as a yearly quota of 600 euros. And they don't have any commitment. They don't have to invest 2,000 minimum ticket in each of the companies that we're going to present to them. They don't have any commitment. Over 90% of our partners have already invested, but they don't have to. And they will not invest until the last of her questions has been answered in an investment process. They also have access now, thanks to Dennis, thanks to Pedro in Portugal, and very soon from Benelux, and very soon from Poland, from Italy, hopefully very soon as well, access to an international deal. For the moment, our focus is in Europe. We think there's a very interesting opportunity in Europe. But we are not in every single hub, but in the countries that we're operating, obviously, because if not, we wouldn't be.
That's a lucky one.
And the last thing you mentioned here, Denise, is the secondary market.
Exactly.
So that some of our partners say, "Oh, that's too early. I'm not coming in at this stage with 2,000, 5,000 revenues per month. I'm coming when they grow up." Some of our partners say, "No, I'm not coming here with 100, 500,000 revenue per month. I've lost the upside. I want risk." That makes a natural secondary market where some of our partners that have invested in a very risky part of the company's stage of its life are selling part or the totality of their shares 2, 3, 4 years down the road in a next round of financing, not in the total sale of the company, to other partners that didn't want to assume that risk at that stage, but are very happy to assume it at the new stage. And we are sure that both partners that sell and that buy have both the same information. The last one of their questions is going to be answered by us. And we do not have any conflict of interest because of many details that if you want, we can come into the details, but
exactly. So again, these are just a few of the things, but the most important ones really to all of our partners and investors. And again, here we're more than happy to chat with all of you, to get your questions on this, and obviously at the end of the stream, you will also get our details, so you can actually send us an email, or we'll have a call, probably a video call for the next couple of weeks. Yeah. But we are there to answer any questions that you might have. So you were already talking a little bit about the track record of Faraday. This is also something that I would like you to just give us a quick flashlight, because obviously, since I only incorporated in November, I obviously know all of the different facts, but it would make sense to get it from you.
220 partners now. The last partner of Germany today. Really began Germany. Really, we met each other 2 years ago already, talking about the strategy, about the internationalization, the communicating vessels between clubs, all these complex things that we hope are going to bring out of value. So we're growing very quickly. In Germany, already 10 members in really 6 weeks of commercial activity. So we're very happy about that. And that's great. And it's great to grow. But again, let's come back to recurrency, which I believe is one of the metrics that best shows the love for a service, a product, or whatever. And for us, we are very proud in the last December renewal process, 91% of the half of the members, the 200 members, renewed, which we are very happy. And we had a lot of very nice comments on the service and how we're doing things. So thanks a lot, all the members that are connected. We're really proud of that number, but not of the number, but for the love that you are showing to us. Thanks a lot. 28 portfolio companies. We have had very nice returns. We're going to go into that with 3 exits. They're Abitissimo, where we multiplied by 10.7 times in 5.5 years. We had Bodeboca with early stage members multiplied by 4 times in 6 years and something. There were more rounds in Bodeboca, so members coming in at the late, they have like 19-20% return in 1 to 2 years because there were 2 rounds at the same price and stuff, and that was okay. And Cody Games, that was a 14 times exit in like three and a half years. We're very happy about that, obviously because of the returns provided to our members. But we're very proud in particular about Cody Games because many people came trying to buy it, and the couple of entrepreneur founders say we're not selling the company. We want to grow and be big, and obviously that led to a negotiation, which was what is the correct price for us to go away. But we are very proud of a company that wants to grow bigger and not get sold at the first opportunity. It's not by selling at the first opportunity that we're going to make big European tech champions. So that makes us a bit proud. We are also very proud of our current portfolio, and we are even proud of some companies that went bust. We are happy that only 4.5 companies out of 28 investments in 8 years had.
Maybe you want to explain the and a half.
Well, we recovered in cash half of our investment. Okay, so the company went bust, but there was a sale of some of the assets, and all shareholders were able to recuperate half of their investment, which was very interesting because of the ethical behavior of the founder of that particular company, and some of the others as well that went bust, and some of the current portfolio have had difficulties. And I think this our job is very interesting because you see people exposed to very difficult situation and changing situation, and you see how people react. Sometimes with overwhelming emotional situations, and you see that, and you try to have, and sometimes with strength and courage and stuff. So it's many times inspiring how these entrepreneurs react to big difficulties, I'd say.
I mean, something that we can maybe also take from this bit is, and that is for some of the attendees that come from the investor, from the VC side, who are also joining us. And you mentioned that before, is that we usually co-invest with other companies. And this is something that's also very important because, as you again mentioned, we always like to have other people who can then also challenge the startup together.
We used to say we co-invest by religion. Because we believe it is very useful. For example, in some parts of the evolution of a company, when there's only one investor, one big investor, let's say, and one entrepreneur group, one founder or one founder group, sometimes in these situations, you feel like confrontation, whereby when you have couple of different stakeholder groups in the investment part with different views and different, this delicate, I wouldn't say difficult, delicate situation where you see some conflict of interest arising become more of a debate than of a confrontation. That's one reason. There are many reasons why I believe it's very healthy for the entrepreneur and for ourselves to co-invest in rounds for deal flow proposals in other companies. It's obviously nice to be able to call other investors so that they call you. So I believe we live in a competitive environment. Obviously, we all strive to get the best deals, but if you push away other possibly very useful VCs because you want to get that deal, well, obviously they're not going to invite you to their best deal. So I believe this is very important to share among investors as well.
Thank you for that. So we talked a lot about what we do. We talked about our past and what is the achievements that we've done so far and where we basically stand today. But that sort of leads us to the next bit.
Next step began by you.
The next step, where, as you said, we actually started, or I mean, in your head, this step probably started many years ago. But I remember when you and I started bouncing this strategic step back and forward almost 2 years ago.
Yeah. So that's why are we opening other clubs? Why are we trying to deploy this network of private investors club across Europe? There are various reasons. One of them is that we believe the best profitability risk binomial for this investment asset is where we are, early stage. Early commercial stage. That means with some says that we can get into the analytical heavy part and we can test clients and we can do a lot, but the valuations are still moderate and we can help them grow. We can add some value into the commercial ramp up and the preparation of next rounds of financing. So we were starting to be a bit too big in Spain. So shall we just go to the next phase of the company's life, or shall we limit our growth in order to make sure that we still keep our nice profits for our members or partners? So I have a lot of financial background. I have a passion for investment finance sector as well as for entrepreneurship. But if you go into the CFA, if you go to Benjamin Graham, Intelligent Investor, all the value investing Bibles, you'll see that size is normally not well related to profitability in investment terms. So what we've tried to design with the network of clubs is a system in which we can be the smallest investor. You've seen our minimum ticket size is 250,000 ideally. We can be very small at a local level in each of the clubs. So each of the local members have access to very early stage, but we can adapt to the real need of the startup that we invested according to their growth and their financing needs by uniting all of the clubs in the next rounds of financing, whereby the local members have left that opportunity because they're not covering the full round. Mm-hmm. So we can really adapt now to a very early stage, commercial stage still, sales, but also when A rounds, B rounds, C rounds come with sometimes very aggressive terms from other type of investors, we can really defend ourselves by uniting everyone at a European level from the Faraday clubs and being able to put in much bigger tickets if needed. And if the profitability is still there.
Absolutely. I mean, something that is also very nice from that perspective, and that is actually also one of the things that that hooked me back in the days, was the fact that we're building bridges.
Yes.
In an economy where there seems to be a lot of isolation, but everybody wants to try to actually work together. And given my background, also having grown up in Spain, and actually some of our investors being also sort of half Spanish, half something else, makes this whole thing very, very nice to actually create a pan-European investment club where we can all not only help the startups in our own countries on the club level, but we also open to those hybrids, I would call them, actually possibility to invest in their other home country.
And it's so difficult at an early stage, as a business and a private investor, individual with a limit with his wealth, to access the best opportunities in another country. It's so difficult. So we can help them. And he will still have if he's a German guy that knows you because you're the managing director here, he knows that it's Faraday, he trusts that. So that's from the investor part, but also this European Union that we want to make. It helps a lot for, as we were talking before, for a startup anywhere from Europe that wants to internationalize across Europe. Europe is a very interesting continent for B2B businesses in particular. We have long track of very successful corporations across all major countries in Europe that want to buy innovation, that want to buy the services, the product, the software from innovative companies that can help them be more efficient, etc. But it's difficult for them because of cultural, language, legislative barriers. So that now with this communicating vessel international club structure, we will now be able to help them commercially in countries where they want to internationalize. So that's very interesting. And on a third level, as you were saying, we are now more international, every one of us. As you say, I guess 80% of our partners have lived for some years in other countries, have parents of different nationalities, and I think that is good, but talent should move as well. not in the current situation, but you always need talent, and talent is everywhere. There's no country more intelligent than another, but you are growing quickly. You need talent. You need trustful talent, and in some Faraday partner in a particular country has invested in a company that are asking for that particular kind of app developer or so system, whatever, and he knows someone that he can really avalar, how do we say, he can refer, yeah. We think we'll be able as well to promote talent mobility for striving startups.
Yeah. Thank you. So now that we had a quick look into sort of the vision behind everything and how this whole structure came up, I'm sure that a lot of the people are also sort of thinking about, okay, so what are these guys going to do in Germany? Germany and Austria to that extent, because I know we have some people watching from Austria as well. So thank you for the ones from Austria that are streaming tonight. So I would basically try to split our goal that we have in Germany in two parts. One which is a very mere and a numerical part, and the other one is more on a personal, on the interpersonal level, on something that's not as touchable as numbers might seem. And I actually want to start with those. So everything we do and everything that we touch has something to do with trust and with relationship between people. And this is something that we're obviously going to try and build and use the context that we have in Germany, but also with the people that we might not know yet, or the people who are joining us as investors, who have put their early trust into us, which we're very thankful for. So these relationships mean build new relationships. They mean building relationships, obviously, with accelerator programs who we've already worked with, or I have worked with over the last couple of years, to sort of have a look at their potential and high potential startups. Obviously, as you said, work with other VCs and get people to know us. Get people to know us, but more than anything else, get people also to trust us. To see that we are a partner that they can work with on an equal level. So I would say that is one of the parts that we're looking into. The other part, also on the personal level, is more on the event side. So today is virtual.
Yes.
We will see what about the next one. So as some of you know who already put their trust into us, is that we will have quarterly events, which is something that we do for all of our partners and investors, but also our ecosystem. So other venture capitalists, but more importantly, obviously our investors also want to get to know the companies that they invest into, the CEOs of those companies. So they will also be invited to those events. And actually, as a matter of fact, now in a few minutes, we will jump into also talking with some of the CEOs from companies that we invested in Spain already. Also on the event side, and this is just a few smaller flashlights that we'll be doing during the course of this year, is we're looking at an Entrepreneurs Day. So we said we look a lot at actual numbers, and we're seeing in Germany, in Spain, and in other countries that we get opportunities from, that a lot of companies still struggle with the actual setup of their numbers, on how to present their numbers. There's lots of templates out there, but nobody really shows you how to use one. And this is something where I believe that we can add value to entrepreneurs, even if they're not invested by us.
Yeah. In particular, entrepreneurs, many of them are new. So many of them, for us, because we've seen that for the last, 10, 12, 15 years, and we're doing that, but every new entrepreneur is new and he doesn't know that, and it's not because you have template that you understand it fully and how to apply it to your business. So we want to give some help to this forward-looking modelization, risk management situation, and financial planning that is so important for running a business.
Absolutely, completely agree. And on the final note, something that we're already doing in Spain as well, and which is something that we want to do in Germany, and we believe this is one core part of Faraday as well, is to empower and to enable our partners and our investors to actually get insights in different investors workshops on how do we actually do a due diligence? How does a due diligence work? What does our process look like? What do we look for in the founding team? All these kind of things. Yeah. Those will be.
That's something we are particularly proud of. I think that's a very important positive externality, social impact they call it. So what I mean is that most active and curious investors, partners from Faraday that had not invested into a early stage startup before, after a year and a half, couple of years with us, having invested in 4, 5, 6 companies, they call us and, hey, I made my first direct investment into an even earlier stage than yours, and I feel confident in my own capabilities because I've seen your reports, I've been to your workshops, and I've informed myself, and I'm becoming a business angel. I was a private investor. I didn't trust myself to go into a direct investment in a tech startup, but now I can trust myself. I see what kind of numbers you look at, what kind of social or personal aspect you look in a team, and I want to learn, like, maybe I'm not going to have a 15 direct investment portfolio, but 2 or 3 in the industry I know where I can directly open doors for them and stuff. So I think that's a very important, externality that we don't have. Well, it's very nice for us because our partners then call us for the next rounds of financing for deal flow purposes, but really, we are creating business angels, which I believe is so important for economic purposes and social purposes.
Absolutely, completely agree. And then to sort of start to get towards an end, obviously there's some hard facts as well, which we set as goals. So let's see if we get the 50 or more partners and investors in Germany. I'm very confident. I think there is a lot of trust and there's a lot of network around the people that already want to work with us. So let's see how that goes. You will see in the following events how we're elaborating on that. And something which is obviously the part that we live for and that we strive for is to do startup investments. So here, as you already said, you're doing 6 to 8 investments in Spain a year. This is something where we will try to get there this year as well, to have 5 to 7 investment opportunities where we can actually go. And without saying names, but we're currently very close to actually offering the first one in the next 1 to 2 weeks.
If not tomorrow, on Monday probably, our first letter of intent to a German company will come out. So we're very happy about that.
Exactly.
I'm sure there will be with you, Dennis, many more than 50 members at the end of the year. It's not in itself the most important objective, and it's not for a rush for anyone or whatever. But it's true that we haven't told how to regulate the size of the clubs. What we do in order to make sure that we can stay small at a local level, which is so important for the profitability and giving good service to partners, being able to invest the tickets they want to invest in the early stage companies they select, is what we do is when 4 out of the 5 last new investment in early stage companies have suffered at the club level over 25% oversubscription, the club is closed. So it's not coming quickly, it's not that. So there'll probably be a year and a half or 2 with no problem about that in Germany. But that's how we regulate size. Dynamic, because obviously Portugal is different than Germany, than Spain, than Belgium. And each club will have his own critical mass to be able to provide good service to partners and good profitability.
So don't worry, Germany is still open in many senses. So we talked a lot about the we also for the last couple of, or the last 40 minutes almost. Who are we? I mean, so there is me representing and looking for startups in Germany. Some of the people who are watching or who are investors in us, they know me. Maybe to just give you a quick background to the ones who joined us on a fresh note today. So I'm a founder, I'm an entrepreneur myself.
started 3 times or 4 times it was.
If I count all the ones that didn't go well and that we tried on the separate side, let's not count. So I started almost 10 years ago, and obviously we had some things that went well. We had other things that didn't go so well. But over the course of the years, we did one good exit to one of the companies here from Munich as well, which then enabled me to also invest into a couple of companies as a business angel. So I started the other way around from what we're trying to achieve with Faraday. And this is maybe the most important thing for me, is that one of my investments, which I did in Spain, actually brought me to Faraday. Because that company, and I'm still a very, very happy angel investor in that company. Back in the days, we're raising around, and we were talking back then. You didn't invest, but I mean,
I hope we regret it.
Me too. No, but this is basically how we met, and then last year we decided after almost a year of bouncing this back and forward to start. And then, like me, there's 2 other people in Spain, which is Jaime. So Jaime, I know you're watching, and Pedro from Portugal, who's currently setting up the same structure in Portugal. And we will see if Pedro is going to do a virtual launch event as well, but we will see how everything goes. So obviously these 2 guys, Jaime and Pedro, are the ones who are scouting the startups in Spain and in Portugal, who are doing the analysis, who represent our partners and our investors in the boards of the companies, and who are a little bit the face to to our partners.
They're the defenders of our partners in their own countries.
Exactly.
I try to help all of them. I was kind of the first managing director, and now I try to help every single managing director, and we're very proud because it's very talented people.
And talking about talented people, there's obviously not only the 3 of us and Gonzalo you're seeing, but there's more people sitting in Madrid who I know were also watching from their homes, because they also can't leave because of some restrictions back in Madrid.
We're all working remotely from 2 days ago already, I think. No, before that.
3 days ago,
Nicole, obviously watching. She's our director of communication. Thanks to her, to Dennis, and to Agora, we've been able to react very quickly to change the setup of our event. So she's a professional of communications. You see her CV and everything. Thank you, Nicole. Thanks a lot. Javier, he's the head of compliance. We are a regulated company by the CNMV, which is like the Capital Markets Supervisory Authority in Spain. And a lot of talking with them, Javier. So it's very important, and he works towards the security of the investments of our members, also on a shareholder agreement level and everything. And our gold mine head of finance and administration is very talented, and for obviously very important tax proposals as well. A professional, how do we say, como la copa de un pino.
Wow, I have no idea.
Some specialist, like a very, very, very nice professional. And well, myself, I founded that. I have my CV in LinkedIn and everywhere. Happy to jump into the questions.
Exactly. So maybe that so much from the 2 of us for the very first beginning. So I know there's people watching. We have somebody in the background who keeps on sending me some information who's actually out there. We got some messages as well. So thank you, Benjamin, for the good words when we just kicked off. Are there any questions to what we've told you over the last couple of minutes? I'll be receiving them here in the chat window. So
Faraday.
We'll give people a minute or 2. We can take some questions from the 3 investors who actually joined us in Munich.
As Faraday, are you also co-investing, or are you just using the money of the members to invest?
Okay,
I can answer that. Yeah.
Sure. I repeat because probably people haven't heard. As Faraday ourselves, are we co-investing? Are we using only partners' money?
Exactly. So from a German club's perspective, me as a managing director, I will be directly investing into all of the opportunities that we decide to invest in together with our partners. Something that is very, very important in that sense is that it will always be the same quantity. And why will it always be the same quantity? A lot of people are going to ask is that if there's something that really, really matters to us, it's ethics. It's about being very consistent in what we do. And we want to actually avoid signaling. So there's a positive signaling because I will obviously be investing into all of the companies. But we're avoiding bad signaling in the sense of that I'm not investing 10,000 into one, 50,000 into the other, and nothing into the third one. Because that
preventing conflicts of interest. Because if you have 100,000 invested in one, 2,000 in another, obviously you need to.
Exactly.
So we have a lot of.
Exactly. And so this is the one part. And the other part is something that we're currently working on. Maybe you want to say a couple of words.
Sure. We actually our shareholders. I am the main shareholder because I'm the founder and everything. At around half of the shares of Faraday is held by very early partners that joined us very early in 2012, 2013, and wanted to help us and really believed in the model. And these partners make, I guess, a third of the total investment up until now, and they continue investing. And also they're investing in our fund. Now we're creating a 40 million euro fund in order to accompany the investments of each of the clubs at early stage level, and some of the best growing and the ones that really need this kind of Series A, Series B money for any single club. And they're investing, I think it's 700,000 themselves. We're from investing from our money in every single company. He wanted to invest as well his own money because he's the one selecting the companies. Actually, I'm the chief investment officer in that sense. I have kind of a veto when I don't see it at all, but I am not selecting the companies. Okay.
Makes for very interesting rounds when we talk about where to invest in. We actually got another question from the watchers. I'm going to read it out for everybody. So what are typical investment cycles or sort of the time between rounds? Because we were talking about also the secondary market or the possibility of a secondary market where people can actually get some liquidity back before a complete exit of the company. So I could obviously talk about my experience from what I've seen in the startup field, but more importantly is what is it like from our perspective in the past from the companies?
They're asking how it works. Really?
No, like what is the time period sort of in between?
Okay. Well, normally companies try to startups that we know and we advise them in that sense. They try to get rounds of financing to get to a next level in terms of milestones. Milestones can be revenue level, MRR, can be internationalization to the next couple of countries, can be things that really objectively add value so that they minimize the dilution, they raise the quantity that they need to get to these milestones, and then raise another round at another valuation, which dilutes them less as founders because they've raised more value in the company. They are in more geographies, they have higher revenues, more talent, whatever. No? Mm-hmm. So we make these secondary markets in the routes of financing because we don't have any conflict of interest therefore. Because we may have invested 300, 400,000 in the first round, but we don't know how much we're going to invest in the next round. So I don't know if it's more important for us as Faraday, the first or the second investment. So don't worry, I can really get you advice, you founder, okay? Because I don't have a conflict of interest and I want to advise you what is the correct valuation, what is the correct size you should be needing which doors to knock on, because we know, obviously, we've been here for nearly 9 years now, many co-investors, and the more appropriate to your kind of business and your strategy could be that one-on-one, and we can really help in this financial aspect of the round of financing. And our members then, at that price point, which we do not decide, is the founder that decides, and it's a price point that we try to have them see whether it's fair, whether the quantity as well and everything, but they do that decision. And this price point is the same for everyone in that particular round. So that's the normal thing. That's where the secondary trades have really happened. We have
that's where they happened. Yeah. But so maybe because we have a couple of more questions coming in, but for the time period, you would say that between one round and the next, we're always moving between 12 to 18 months.
1 year, yeah, 12 to 24, I would say. 1 to 2 years. 1 to 2 years. We've already transacted over 2.5 million, 2 million or something, with half of it being returns, positive returns in secondary trades. So we're very happy about it. It really works, the secondary market, and it will probably work even better at a European level. But that's the normal situation. We've also had situations where someone has got very, very ill and needed to sell a big stake, obviously, and we've moved the secondary market with external parts to make sure we have no conflict of interest and to make sure that this difficult situation in this family could be solved.
Thank you. We also have 2 questions from Spain actually that came in. So we have some of our investors from Spain who are also watching. So Martin is asking, what will be the next stages and steps after Germany for Faraday Venture Partners?
Because Germany, we've already opened Portugal. We're now raising a 40 million fund. On September, as we were saying, we will be opening Benelux from Brussels. We will be opening in March next year, either Italy or Poland. And on September, either Poland or Italy. And we'll recheck our strategy at that point in time, with the fund and with 5 countries in Europe open. But the intent is to continue to open a couple of clubs a year in Europe for the moment.
And then I would probably say this is the last question for now. And then we jump into the panel with the 3 CEOs who are already waiting.
Thanks a lot for waiting. Thanks a lot.
They're already waiting to get into the conversation. This is a question also from Spain, from Nacho. Do you see an interest in pre-seed projects, or are they completely out of our scope?
Pre-seed.
Exactly.
Okay. We cannot invest without sales, and normally we start with another company with a minimum of 3 months of sales, but we prohibit ourselves to invest before the 6 months. Yeah. So obviously it is interesting, and we're happy to receive pre-seed ideas that are near commercial launch, especially if they're innovative and different to everything that we see. So obviously, there's a lot of value. We cannot invest, and we do not trust ourselves in just making a decision on a vision. Yeah. Of we need to check the execution capabilities. Absolutely. In particular.
Yeah. Okay, cool. So without further ado, I would say we jump into the panel. Thank you very much for the very, very interesting questions. I think that Agora and Matteo are now going to make the switch for everybody to get connected. Let's see. It's going to be exciting.
So while they're connecting themselves, I'm just going to introduce a bit. We've asked, here they are, Pablo, David, and Jorge. Jorge, thank you very much. Pablo and David, I guess, from Madrid, and Jorge from the US. Thanks really a lot to the 3 of you to connect. This is 3 companies we are really proud of. They're executing brilliantly. Very different companies. I'm going to ask themselves to present in a minute. But in some ways, the 3 of them related to the travel sector, and with interesting investment opportunities, I guess, for the latest part of the year. I mean, please, all VCs that are connected, bear on, because you will be able to know about some of three of very interesting portfolio and Spanish companies. So thanks a lot again. Let's begin by Pablo, and then we'll go to David, and then to Jorge with a very quick, bit of background about yourselves. I mean, Pablo, who is Pablo? Why did you founded Reclamador? And what is Reclamador? We'll jump into a bit more detail afterwards.
Hi, first of all, thanks for inviting me to this meeting. Faraday has been one of our main shareholders from the very beginning. So I'm really excited to cooperate in whatever you guys ask me for. I have a business administration degree. I also studied film production and distribution, and I also have a master in digital businesses. Before Reclamador, which I will tell you now what it is, I began my career in investment banking in Paribas by that time, which now it's BNP Paribas. Then I worked in film production and distribution for 5 years. Then I launched the retail arm of the gaming company bwin, of which I became CEO in Spain. Then I launched a company together with a UK company called Future Films, which is based on tax incentives for film investing. And then it was actually going to Germany to see the Berlinale, which I go every year. That I had an incident with my phone company. I'm not a lawyer myself, but well, just to sum it up, I ended up having no mobile phone for a week and owing a company that was not providing me 100 euros for I don't know still what reason. So what Reclamador is we are an online legal digital services providers that try to make things easy for consumers to claim against big corporations. So we handle claims against airlines and with similar companies do in Europe, like AirHelp, or just to talk about your money flight right or EU claim. And we do the same thing for other industries as well. We have a lot of business claiming against financial institutions. We also claim insurance companies. We also claim city halls for taxes. And as of today, we've been 8 years in the market. We claim over 200 million euros. Out of the cases we've solved so far, we have a success ratio of 98%, and we are 80 people, and that's the picture so far.
If you could, just for also VCs to know what kind of stage revenues 2019 and funding approx so far, probably.
Oh, yeah. We've had 2 funding rounds. The first one was in 2013, where we raised 600,000 euros. And the other one was back in 2018, where we raised 1.7 million. And we are in a stage of, we have 2 main KPIs. One is our revenues, which we are in the region of 3.84 million in revenues. When I talk about revenues, it's kind of gross margin for us, because if I win a claim on your behalf of 1,000 euros, that would not be my revenue. My revenue would be my commission. So on legal commissions, we're in the region of 4 million. And we have another KPI, which is what we call portfolio, which is how much we estimate is the value of our claims, assuming that they are in court. And it takes time to get the money out of the court because the legal system is not efficient. And by this, I mean, it's taking on average 2 to 3 years to collect that money. And we're talking about 20 million in that sense. So actually, last year, we focused in finding a financial solution, talking to litigation funds to fund these kind of assets, which are consumer claims with clear jurisprudence from the European Court of Justice or with the Spanish Supreme Court. And we closed that deal at the end of December. So now we're ready to face growth challenges again.
Thanks a lot. David, you.
Hello.
Thanks a lot for coming. I know you're very busy at the moment.
Quite busy today. Again, it's a pleasure also for me. Whatever you need, whenever you need it, Gonzalo and Faraday, I will be there. Very, very thankful for your support all of these years. My name is David Hernandez. I'm from Barcelona. I'm an industrial engineer. I worked half of my life in strategy consulting and half of my life in investment banking. And I did an MBA 14 years ago. And then I realized I love traveling. And I realized that if I wanted to book a trip or a travel to anywhere in the world, it was quite inefficient because either I had to spend hours and hours in the internet, surfing in many web pages and putting my contact details and credit cards in many web pages, or I had to go to a traditional old-fashioned travel agency with a very, very poor value proposition. So I thought there should be a better solution in the market. There should be a better way. Someone who can provide a made-to-measure trip at a very efficient price with an expert advisor, with technology, and with a fantastic consumer experience. So I thought there would be a possibility to create a new concept of travel agency. And this is what we did. 5 years ago, we raised in a first round 3.2 million euros. In 11 months, we opened our first store. We hired 40 people. We launched the product and the technology. In our first year, we sold 9 million euros. Second year, we raised another 5 million to open our second store in Barcelona. We sold 15 million euros. Third year, 22 million euros. And last year, we raised 9 more million euros and we sold 32 million euros. We are already 200 employees, and if coronavirus let us, we are aiming to sell 55 million euros this year. Our aim is to transform and conquer the travel agency sector, both in Spain and globally.
Thanks a lot. Thanks a lot. And Jorge, thanks a lot for joining from the US. Could you please explain a bit yourself, what Tracer is, Tracer Hello Tickets / and for mostly investors that are joining in and everyone, a bit revenues last year maybe.
Sure, thank you very much. Very nice to meet you all virtually and glad to be here. So Hello Tickets is a platform where people, especially in South Europe, Latin America, can book travel experiences and live events all over the world. So, for example, you're going to New York, if there wasn't any virus around, and you want to see a concert, or you want to see a Broadway theater show, or you want to take a helicopter around Manhattan, you can do it in our website. Now, that is a huge industry. The tours and activities industry is actually more than $100 billion of size, and there's just 3 big companies around the world doing that. One of them is in Germany, by the way. Get Your Guide is a German company, very well known. But among those 3 big companies, they only have 7% of the total market share. Where is the other 93%? It is very fragmented. The industry is still in its first years, the online industry especially, and there are many, many small players taking advantage of this fragmentation, and the big players are taking a bigger market share. We think we can be a challenger, and we can be special challenger in regions and countries that are unserved with all these big companies, small or no presence at all. We, the team, come from another company. It was a ticketing marketplace. We built it from scratch and sold it to eBay for 150 million euros back in 2016. This is our first venture by ourselves. We all had executive roles, but we were not the CEOs or founders of that company. But we feel that we've gone through a growth phase and we've gone through scaling a company before. We've raised so far a little more than 3 million euros. We started in 2.5 years ago, Last year, we sold close to 9 million euros in gross sales and a couple million euros in net revenues. This year, we're aiming to sell between 15 and 20. I would give you a more specific number, but these days it's a little tougher. Everything has changed with the virus.
Sure. Like
so I mean, I might pick up right where you left. So the three of you are all in a very, very similar field, but not in a similar field, but you're all somehow to do in the travel affects you to a certain extent, or the booking of public events. And maybe we go in the opposite direction backwards for the three of you getting an answer, because I can see some of you might have, as you just mentioned, a possible negative impact. But on the other side, somebody like Pablo the Reclamador might actually have a positive impact. So I would maybe get a quick flashlight from you. How are you coping with this, and how do you expect something?
We're all worried about the coronavirus.
Exactly.
We also have we haven't planned this, but you're all in a sense related here with Hello Tickets Tracer, with blockchain and the reselling industry as well, the travel agency, with the claiming legal stuff, but all have been affected, especially because it's not a totally different kind of industry. We are all affected by this, but probably especially in business terms, three of you. How are you coping with that? Both an internal way, I guess, remote work and everything, but what kind of stop loss, what kind of initiatives are you deploying for the business?
Yeah.
Probably coming with Jorge.
We, as of today, and we're the #1 source of NBA tickets in Europe, in Spain, in France, in Italy.
So for basketball NBA league, right? For Europeans that want to go to the New York,
European and people in Latin America and Europe traveling. So yesterday the league was canceled, was suspended, but it's going to be canceled. The travels to the US, they're canceled, and that represents today 90% of our revenue. Now, luckily for us, the regular season, which is the moment where we sell the most in New York, is going to end in a month, and it could have been much worse. But to give you a sense on what's going on, we knew this was coming 2-3 weeks ago. We just had to look at Italy, and we knew that in Italy, if they were suspending football games, it was going to happen in the US at some point. We were considering between the 15th of March and the 1st of April. Finally, it was a little earlier. But it was a hit. We're going to fire 50% of the staff temporary until the coronavirus crisis has passed. So for the we're taking at least 6 months until this has passed. We're going to reduce our salaries, and we're going to start in a mode where every artificial expense, even for a marketing tool, anything like that, has to be eliminated. So it's a big impact. Now, you could say that, and the way we see it, this is, we're not going to die as a company, right? We have cash in the bank, and the value of the company is still there, and it's going to be there when the coronavirus passes. But we feel that this is a fantastic moment to prove the type of company we've built, which is a solid company, which is a team that can go through probably the worst crisis in modern history. Because in 2008, companies had time to prepare for this. This has happened overnight. We stopped having sales literally overnight. We knew it was coming 2 weeks ago. We didn't know it a month ago. We're going to go through this. We're going to be back in business normally 4, 5, 6 months. We will try to rehire the great team of 25 people that we had. We're going to be only 12, 13 people now. We're going to keep the development team, which is the most difficult team to replace, developers. And we're going to be stronger. But it's been very tough days. We still have tough conversations ahead. And this is the type of situations that, as everyone says, either kills you or makes you a much stronger company. And only.
Oh.
That was the internet in the States.
Yeah. I think that was a very important thing.
Yeah.
So people that now here he comes back.
He's back.
I had finished, actually.
Yeah, but it is a very important sentence, and we are repeating that to ourselves as persons more than investors, entrepreneurs all these days. Let's be strong, you know. And when difficulty comes, with the right attitude, let's refocus on technology. Let's work on what we can work. Let's not fall down. So difficult moments prove you stronger if you react positively. And thanks for that.
Well, thank you for being so open as well.
Yeah, thanks. Let's go to David.
Okay, I could say exactly the same words. So we are a travel agency. We send Spanish people across the globe, and today Spanish people cannot go outside Spain. So obviously we have a problem. But again, I fully agree with Jorge, and I feel very much.
I'm here today in Munich. I hope I can come back to Spain tomorrow, see my daughters and stuff. But let's fight difficulties, however we can.
Exactly. The advantage that we have as startups is size. We can reduce our size to resist. It's not as easy to reduce when you are TUI or where you are a monster. So it's easy for us to reduce and to resist over the next 4, 5, 6 months, and then be stronger. And again, as Jorge was saying, and I'm telling my investors, we have created such a talented and strong team that we will overcome that and we'll be stronger. And this will make us a lot more efficient, because in 6 months' time, when the market comes back, we will be thin, we will be fit to capture the market, and we will be stronger because we will live together a very difficult time. So for sure we'll be stronger. So very, very much linked and agree with what Jorge said.
Yeah, and yeah, I hadn't thought about that, but that's very true and very interesting size. Obviously, the biggest companies, which are at the moment the biggest competitors of most startups, are unfortunately going to suffer more than startups. So probably when all comes back to normal, and we hope obviously to be that as soon as possible, for human reasons more than competitive reasons, but you will probably be more competitive against your traditional competitors that you were 2-3 months ago. So let's look at positive things as well, obviously. Yeah. Pablo?
Well, for me, it might look that it's good news because there's a lot of travel incidents, but it's actually not. It's working the other way around for a very simple reason, which is that if it's a force majeure cause, what's causing the delays or the cancellations, then you cannot claim anything. So what we realized these past days is that all the money we were investing in AdWords was basically being thrown away because we had to tell the clients that they cannot claim anything. So what we're doing now is letting our competitors spend their money in AdWords. I'm checking that every day, and they're struggling, and that's for a very simple reason. It's not that we're smarter than them; it's that they are focusing on airline claims, and we do many more other things. So we've absolutely cut down all marketing expenditure in airline claims as of today. We're saving, luckily for us, it's a low season. Peak season begins in June, July. So we expect the market would be better by then. And at the same time, there were 2 big pieces of news for us last week. One was Supreme Court ruling in Spain regarding revolving credit cards, which have been declared abusive. And we're talking about 8 million cards in the market. With an interesting average ticket in the region of 2,000 euros per client. and there was a European Court of Justice ruling referring to some kind of mortgages sold by Spanish banks in the past as well, which have been declared abusive. They were talking about almost 1 million people affected. So we are focusing our marketing and our marketing efforts in those kind of claims, which for us it takes longer to monetize them, but it's really what's going on now. And at the same time, in Spain, the legal market, it's around 10 billion in size. We're talking around 90,000 law firms in Spain. So the average revenue per law firm is really low. It's in the region of 100K per firm. So we are beginning to design products that are not necessarily related to claims. Our vision is that legal services will be consumed online by consumers. I'm talking about wills, inheritances, company setups, whatever. And we are doing our first steps into that directions, and we are preparing products that can be monetized initially. Mm-hmm.
Thanks a lot. Thanks a lot. Because it's on the corner thing, yeah.
Yeah.
Let's put it now, yeah.
Just a quick question.
Yeah.
Because now is a time of an exogenous shock, right? And having to let go 50% of the staff is a really big issue. So maybe thinking positively about things is employee stock option programs. Would that be a way to keep employees kind of in check instead of paying maybe just half of the salary? Something like thinking creatively, is that something they consider?
It's one of our partners who is here, very small number, don't believe this is an event, but he's asking about maybe share option schemes will help retain the talent that you need not to count with for these 2, 3, 4, 5 months time. Are you thinking about that?
So when you like taking salary cuts to actually keeping the people and sort of having the level up the salary cuts with a virtual stock option, right?
Well, in our case, we're not reducing the team. So we don't work with, we don't have like an airline team, a bank team, or a tax team. So our teams are flexible, and we move them depending on the demand. So we really don't need to face that problem as of today.
What about Jorge? He was talking about half the employees. Do you think that could be an interesting solution?
We've thought of that, and we probably have to do both for some key employees. But I think the key employees, the core team, first of all, it's true that we're letting go 50%, but we hope it's temporary. So there's a Spanish law, and I think it's probably the same in Germany, where you can stop the contract for a few months and then hire them back if they want to, and if they're available. And secondly, David was saying that this is a way of being more efficient, and it is true. We're not letting go the best people in the team. The best people in the team, they're staying, they're loyal, they're more committed than ever. Right? There's always in a moment of difficulties a sense of community, and we do not feel we have to do that with the rest of the staff. They either will be back or they will be replaceable, and it is tough. We're talking about people, young people, but they have their life and their bills to pay, and we're gonna do it the best we can, no doubt, because they helped us to be where we are. But in that case, most of the employees will not be necessary to do that. For some key employees, I'm thinking of 2, we might. Yes.
Okay. David, I don't know if you want to add something about something you may have had or ideas you may be thinking about. Share options.
Not really. We are not considering that so far. So we are in the middle of the storm right now. Again, very, very, very much aligned with what Jorge said. Commitment and people being linked to the company. We will not let good people leave. We will make an effort with good people. But anyway, we will reduce everybody's salary. I will reduce my salary. So everybody's going to reduce the salary. And some people have come to us to to tell us, I want to reduce my salary. So the team is already telling us, tell me how much and I will reduce my salary, don't worry. So I think that one of the good things about startups is also the commitment of the people, and that it's more understandable, and it allows us to be, I think, more flexible than large companies.
It says a lot about the team culture that all of you are fostering, which is something we were talking about before with team excellence, and you actually everybody being super committed, which is something that we obviously look for, and we're very happy. I mean, all the investments were made before I got there, except for Tracer, which was right when I got there. But it shows that I think we have made absolutely always the right decisions.
Yeah. And, you know, every difficulty, again, it's an opportunity and stuff. And now you're seeing as a lot what you wouldn't be able to see in a normal, because you're very successful doing company and stuff. When shit comes, you see who is committed and who is prepared to wash the fun. Yeah. Okay. Let's move from the coronavirus. Absolutely. I guess you're all tired of hearing about it, but let's stay on the difficulty part, because I know that there are also very early stage companies that we may be investing, hopefully in the near term, in Germany and across Europe. And we would like to come to the first big problem, big difficulty you had in the first couple of years, which is where normally we have met you and invested our first ticket. What was one for each of you the problem in this first 2 years, how you coped and how you surpassed it? As in particular, as a kind of advice to the early stage companies that may be watching you now. Let's begin by Pablo, who is just here.
Well, I would say the main problem was that I wanted to basically to prove a legal thesis. They were telling me there was a regulation in Europe that implied airlines had to compensate passengers, but I had no idea how the legal system works. So, and I look at Google Trends, and there were no clients searching for that because no one knew the ruling. So the way I came to this was quite simple. I began with my former girlfriend, actually, to go to the airport and explain people the rights whenever we see there was a flight coming late. So that's how we got our first customers. And the way we convinced investors that the thesis worked was by suing airlines. That was the only way. So I remember for some reason the first money that came into the company, it always came on Friday, and it came on envelopes, and they were checks from Iberia Airlines. So we had a breakfast every Friday, and we had everyone betting on what was the content of what was the amount of the check. Yeah.
I remember. So proving that the model worked, and we invested. We loved the idea. We invested with, I remember, the first 400 euros of revenues.
Yeah, that came from Lot Polish. I would never forget that.
So, David, what was for you the biggest, very early stage? I mean, he said just before he raised the 3.2 million first round. And people say that in Spain it is not possible to raise the finance without being able to prove sales. Well, David is a very convincing guy. He raised that amount before his first euro sold. So that doesn't work as a difficulty. But I don't know, a very traditional idea. I mean, a travel agency, but he wanted to change everything about the travel agency. And he was able to convince a lot of professional investors to come in before the first owner of the first shop was there. So what was, for you, David, the biggest challenge in the first couple of years of activity for Pangea?
Apart from what you said, it was a real challenge to convince 5 years ago investors to put 3 million euros on a piece of paper. It was quite challenging. But it was about people and human resources. My right hand, when I started this app, the guy who just helped me set up the company, and create the team and everything, I had to fire him 1 week before we opened the first store. So after working with this guy for 16 months, and a week before opening the first store, I had to fire him. He had hired half of the team. He had a lot of friends within the team. So I had to engage the rest of the team in the middle of an opening of our first store of opening operations. So it was quite tough, but I think it's very important what we were saying before. When you are honest, when you treat people in the right way, you manage to create committed teams. And this is critical for any phase of the process, for any difficulties on your way. If you have created a strong and committed team with the project and with yourself, then the company is much stronger and can overcome this kind of problems.
Thanks a lot, Jorge. First couple of years, big problem, solution.
It was, I think it was product market fit, and we thought we were in Los Angeles. We were part of Techstars, one of the biggest accelerators in the world, and we met a lot of people in the music industry, in the most important city in the music industry in the world, in LA, and we misunderstood, I think, the signals from many of the people in the industry, thinking that it was proving product market fit. But as many people say, only the real traction, those are paying customers. These are not people who say, I would definitely use your product, I would invest in your company, even the investors in your company. That doesn't mean traction. Traction and product market fit is paying customers, and we learned that, and definitely that was the most difficult moment, and we had to change slightly our value proposition.
Cool. So that also leads me to another very, very interesting question. So we have a few of our investors watching. We have VCs from Germany, probably some from Spain watching as well, maybe even some from Portugal. And again, this might be a difficult question at right now, but obviously you're all looking to grow, you're all looking to expand. We already heard some of the plans from Reclamador, but still, what are your futures, like the steps after the next 3 to 6 months? Where are you trying to go? Where are you heading?
Yeah. Let's imagine the coronavirus is off in 2 months. What will be your plans for the end of the year, next year, and the funding opportunities, investment opportunities for the VCs that are watching? Let's begin by Jorge, who was the last in talk.
We think that we are still aiming for profitability by the end of the year. We obviously are going to have a delay in our growth in terms of revenue, in an annual revenue or annual gross sales. But I think by the end of the year, we can be profitable. And that's a very important, and it becomes important in times like this, when there are tough situations. You have a business that works and that it's solid financially as well. After becoming profitable, we will raise our Series A. That should be happening at the beginning of 2021.
Okay. David?
So this year we need to prove 3 things. First, just prove that we are profitable, that each one of our stores is profitable, and mainly the last 2 ones that we opened, that we can open a new store and make it profitable on year 1. Okay. If it was not because of coronavirus, the chances of achieving 55 million euro sales and profitability would be 99.9%. Now with coronavirus, who knows? The second point is to complete all of our service platform. It means technology, product, and processes to be able to create the best customer experience and service platform in any travel agency worldwide. And the third one is try to demonstrate that we can franchise our model in smaller cities. If we can prove these three things, we are absolutely sure that we'll be able to demonstrate investors that we are profitable, that we can grow like crazy, and that we have a value proposition and service platform that is unique worldwide. If we do this, we are pretty sure that we will be able to raise a next fund of maybe 40 million euros to do the next step of the company. The next step would be to conquer the Spanish market, which means franchise opening, store opening, and a marketing campaign. This should let us be able to achieve between 300 and 400 million sales in 2, 3, 4 years. Second is to complete the IT platform. We are aiming to create, the travel agency sector technology is crap and is terrible. We have been trying over the past 4 years to trust other partners to create the technology that we use. We realize that no one can create this technology of the traditional partners. So last year we set up our own IT team, and we are developing technology for travel agencies, technology that not any travel agency in the world has. And the idea would be to raise capital to set up a larger team and start a project to create the only front-to-back technology for travel agencies that can absolutely digitalize the process. And third, to test that we can launch this same model internationally. And probably we will launch first in Colombia, and a full launch in the country, and probably one store in the US. If we can prove that we can replicate the model in a new country like Colombia, and if we can prove that the Americans, only with one store in one city, that they like and they love the project, then the next step is going to be crazy. So we will be able to prove a huge value. So and then after that, the sky is the limit. So we will see. But this year, profitability, complete the platform, demonstrate that we can franchise. Then we would raise 40 million euros capital, and then conquer Spain, demonstrate that it can work internationally, and third, complete our own IT platform.
Thank you. Pablo?
Well, yeah, for us, I would say that the main goal is to survive, which I'm ready we will do. But I'm thinking about the coronavirus. I mean, if we take that out of the equation, then I would be 99% sure. But we don't know if courts are going to close as of today and how that's going to affect our cash flow. But having said this, I'm quite confident on this. I don't think it's going to be black or white. So at some stage, it will become stable. And our first step regarding growth will be to prove ourselves there's a value proposition in non-claiming products in traditional legal services, but being provided in a complete different way, which is online and as a digital experience. And for that, my idea as of today is to do a small funding round, maybe by mid-year, but that's something I still need to concrete. And once we come over that stage, I'm thinking of next year. I believe what Reclamador is doing, which is protecting consumer rights, it's perfectly exportable to many, many countries in the world where consumer rights are being stepped over all the time. So in terms of funding, a small funding round this year to prove legal services in Spain can go beyond claims, and the second funding round to export our business model to at least one more territory.
Thanks a lot. I know you're all very busy, but so we're gonna keep it short because we'll probably have a couple of questions as well at the end.
We have some questions also from the viewers.
Yeah. So I wanted to ask you a last question. and in particular for the early stage CEOs that we have watching, or that will be watching the video later on. If you had to give a single piece of, I'm going to ask you that question already because you're also an entrepreneur. You can prepare it. What piece of advice you would say? You would give them, Pablo?
I would say clearly, no fools, no friends, and no family. That's my piece of advice. I know it's quite a standard to say friends, fools, and family to begin, but my experience is well, I don't want any fools on board because I just want people to be aware of what they're stepping into and the risk concerning the startup. When it comes to friends, I've had the chance to work with some of my best friends, which I included in the team. And there's really no need to do that. That's my conclusion. You can find similar profiles that can do the same job, because even though they're my friends and they will always be my friends, the relationship changes because a startup brings a lot of tension within. So I would say leave your friends outside, and family, leave your family outside. I mean, when I launched Reclamador, I decided to hire my former girlfriend. So I guess this sentence explains it all. It's not easy to work with relatives.
Okay. David?
I would prohibit to someone to be an entrepreneur or launch a company without, in advance, talking to at least 2 or 3 entrepreneurs. So before being an entrepreneur, just find 2 or 3 entrepreneurs and invite them to have lunch, dinner, or invite them for the weekend and talk to them. The learning process is going to be crazy. And when you're an entrepreneur, everything you're doing is so new, and any piece of advice or having a chat for an hour or 2 with someone who has done that before, the value is invaluable. So I wouldn't allow an entrepreneur to be an entrepreneur without talking first with 2 or 3 entrepreneurs, because it's absolutely incredible value.
Thanks, Jorge.
I would say if I was talking to a young CEO or someone first-time CEO, that it's very, very, very important to do your numbers. Sometimes it's very easy saying there's a lot of people who would love this or that, or if everyone would spend, make the numbers. And sometimes the numbers are quite different to reality. You just have to put in front of an Excel spreadsheet and make some numbers and keep that in mind. The problem in Europe is that we do not have a lot of chances to be right. This is not like the US when you get that $10 million seed round, or even 3, 4, 5 million seed round, that you can make a lot of mistakes. And if you base your business on data, you're gonna make much less mistakes, rather than just ideas or thinking that a lot of people would do this or would do that.
Dennis.
Okay. So obviously I gave it 2 thoughts while still trying to listen to you guys with your very, very valuable advice. One that might contradict a little bit what you just said is, I think a lot of gut feeling is involved in this as well. Trusting your stomach, trusting your feelings, especially when it comes to a team. I think that is one of the topics where at least I have made, I would say, bad experiences, where we as a founding team maybe trusted or took somebody into the team where almost all of us said, I'm not sure, but hey, this is the best bet that we have at the moment. And in the retrospect, we were very unhappy, and we had a lot of troubles and a lot of fights. So I would say trust your gut feeling, especially when it comes about the people that you're going to work with.
Fully agree.
So let's jump into questions.
Exactly. We'll, so first of all, thank you very much already for your answers and for joining us in the evening. Maybe if you can stick around a few more minutes, because we'll see. We already had one question from the crowd. There's two questions that are more concerning
the online crowd.
The online crowd coming here, which are concerning Faraday itself, which I would go into in a minute. Maybe there's somebody who has a question for the three founders.
Yeah, in particular, we have.
If not, while they might ticker in, we can take the two questions from the crowd. So one is more of a comment than a question. Let the German kid speak. We want to know what he has to offer to investors in Germany. So I guess I'm the German kid.
Beard,
I know. I still look pretty young. You know. I shaved today. So I unfortunately do not know the name of the one who gave us the comment, or when you joined us this afternoon. So I would probably say that you get our contact details. You can contact me afterwards, and we'll have a quick chat about what we can offer you, because you might have joined us a little bit later because we had explained everything in the beginning of the stream today. So just to take that comment first of all, and then we have a question from no first name. So I would say, I just repeat the question: which was the last company invested by Faraday?
Well, it's now official. We can the co-investor is putting the money now. Well, I can tell without the name. Okay, so it's a company with a textile technology that allows, in particular, shorts and polos. We say polos as well in English, right?
Yeah.
That doesn't get shredded, that you don't have to iron, that you don't have to wash. So obviously you have to wash, but much less times. It's much more difficult for transpiration to go into it. And they're having huge commercial success. We've talked with people. We've tried, you can throw a coffee on the shirt and just don't get anything from that coffee. And they're stylish and stuff, so we're quite happy. And we've talked with people very happy, and we see the recurrency ratio as well, the margins as well we were talking about. And we're seeing a bigger and greater interest by companies, by corporations, small corporations. But no, there's one bank that wants all the employees to have one shirt from this company. But obviously for the hotels and the restaurants in particular, not now, obviously, but it's going to be very interesting as well. So textile tech, and the CEO is very oriented towards social impact. He believes that, well, he knows that the textile industry is, I think, is the second biggest polluting industry. Yeah, and he thinks his technology could make an impact, not only his company, but the spread of his technology could make an impact in reducing the turnover of the textiles that we have, and the turnover of the washing that we have. So that's the last company. We've just invested in it a bit over 270,000 euros, but it's not totally closed because there's another co-investor covering around half of the round. It's a small 500,000-600,000 round. We're very happy.
And then, so as a comment from the German kid, I let Gonzalo explain it because obviously he's managing together with Jaime. They're managing that opportunity.
It's a Spanish company, but you can.
If it would have been a German opportunity, I would have probably said something which we're currently looking into. I hope, like I said in the very beginning, I hope that we can actually send it out to our investors, and the ones that are interested, obviously, get in touch with us so that we can share that opportunity with you as well. Very, very exciting from my point of view, or from our point of view, very exciting B2B software as a service company. I'm not going to tell you too much about what field they're in because it's going to give a lot away, but it's a passion that a lot of us share. So we're looking forward to that. And since there are no more questions, I would like to again thank the three of you for joining us
Thank you very much
from the US. Thank you very much to you.
Thanks a lot, Jorge.
Thank you, guys.
Thanks a lot.
And then on a final note, I would also like to thank everybody who was watching us. We will, as a comment to that video, also post our our email address so that you can get in contact. Feel free to reach out to us. We are here to answer any questions in the next days, weeks, months, and years. Whenever you need us, just call us. And then.
And thanks to all of you three, obviously, but to everyone that is watching here and online in particular and stuff. Well, a lot of strength in these difficult times. It's an opportunity for commitment, for community building, for innovating solutions, and lots of strength to you. We really believe in you.
Let's go.
Thank you.
Thank you
very much, and have a nice evening, everybody.
Bye.
Thank you.
You too, guys. Thank you.
Bye.
Bye-bye.
Bye.